What are the downside risks here for the property sector after that latest action from Fitch?
I don't think I guess the immediate feedback is that the interest rates will be climbing, borrowing rates will be climbing for many developers. Fortunately, many of the big ones have the REIT lined up and they're going to exhaust as much capital as they can raise from the REITs. And that should defer them from having to go to the bond market. And I frankly think that the impact would be minimal because the private sector has been fully funded on its own, and most of the condos being bought are secured by local buyers. The local buyers are secured by overseas remittances, so it's not really the bank lending rates and the bank uh, actual amounts lent to the market is an impact 3 to 4 quarters away from what's happening on the ground in the market. So any changes in interest rates or amount of lending into the system only impacts the market not, 3 to 4 quarters from today. So I think there's going to be a delayed impact on that. It won't be immediate.
But
Unlike the
should,
stock market.
but should there be at least a possible investment grade downgrade, a downgrade rather? How can the sector weather any possible fallout from that?
Well, just remember that we came from the whole of the junk bonds 20 years ago to what we are today, and we can very easily go back to self-funding, the developers funding their own projects using the pre-sale activity from buyers. And frankly, that was the way developers built projects up until very recently.
Now,
So
going to your, go ahead, David. You were saying?
I don't think the ratings will have a meaningful impact. Of course, it might cost more to borrow money from the formal lending institutions, but I think the developers have found ways to adapt to that previously, and they will do so again if money becomes too expensive. And fortunately, and the timing is perfect, the REITs are coming to raise liquidity for the developers also. And they're not, unlike in some developed markets, companies that REIT end up using the money to acquire new assets that are normally overpriced because there are 20 to 60 REITs in these developed countries, all competing for the same finite assets. Here, in this first cycle of the Philippine REITs, they are going to raise money to deploy to construction projects. So they're not going to go into this expensive buying binge of assets. They're going to go directly into completing their current construction projects in lieu of borrowing money.